Awesome. Well, we're at the top of the hour. So I think, Amy, it's time for us to enjoy a bit of conversation on what's one of our favorite topics. And today we're looking to cover top e-commerce accounting mistakes. Now, we'll go over five of them. But of course, we come across many others in our experience in serving hundreds of brands, particularly in the e-commerce industry. I think the nature of e-commerce is just a difficult landscape. So there's some complexities that come about in this ever-changing field that we're both sitting in. So for those of you who have not met Amy Kroimans in the past, I'll turn it over to her for a bit of an introduction. But I do want to share Amy and A2X are amongst our favorite partners. We often find ourselves at their booth at industry events, alongside them at the bar afterwards, but really have enjoyed the connection across the last few years in building and growing alongside one another. So, Amy, if you could share with our webinar attendees a bit of an intro.
Sure, absolutely. So thanks, Lane. So I'm Amy. I work at A2X. So A2X is an e-commerce accounting tool. I've been at A2X, I think about 3 years now. Initially, I started doing kind of like, I guess it was like sales, but helping some of our larger customers come on board. But now more recently, I do product marketing, which is talking about all of the awesome features that A2X is releasing. So work really closely with the product teams and communicating what we're building. And I also, I guess, have a responsibility for making sure that the customer's voice is heard. So making sure we don't lose sight of the customers when we're getting busy building things. So as Wayne said, for A2X, we work really closely with a lot of firms. So yeah, what you said about the booth is so true. And it's kind of one of the reasons that we did camp this year, because we found that we'd often go to these conferences and we'd end up just chatting and yeah, socializing with the awesome partners that we had. So really happy to be here. Right, thanks, Dan.
And I'm happy you were able to join. Amy's coming to us early in her morning in New Zealand. And I want to say, I think what you bring to the table is that unique understanding of both the product, but also the customer pain points. So with that, I'd like to jump in, share a bit about what we're here to chat about today. The reason why we're here to have a conversation is twofold. I think there's a lot of information that we can share in a unique angle. I think bringing to the table industry experts that not only have already understood, researched, and come up with a solution to many of these issues is important to brands and growing e-com businesses, because often people struggle either to ask the questions, but also struggle in finding the best answer. We, of course, tried a number of solutions prior to identifying the true solution that one provides that timely, accurate insight through financial data with our customers, but also with a partner that really listens to our unique take in through our day-to-day interactions with the tool and in our conversations with customers. Of course, there's things we identify that we hope can be addressed either through additional time spent with our customers or automated in a way that helps remove that time, so where we can then really focus on those conversations. So today we're going to cover top 5 e-commerce accounting mistakes that we see. We're going to talk through some of the ways to spot, but also address them in their business. And then we'll leave time at the end open for Q&A. This webinar is being recorded. We will have it shared out on YouTube. So if you're aware of other brands or folks that are interested in this content, please share it out with them. So without further ado, Amy, here we go. We'll share the top, probably not the number one mistake, but I'll say one that we see more often than not, and one that typically creates an amazing opportunity for us at B Ninjas as e-commerce accounting specialists, but brands using cash basis accounting. Amy, any thoughts on this key mistake?
Yes, this is one we talk about all the time. And I think it's, I guess, perhaps an important distinction I think a lot of people probably start their e-commerce store and get really excited, and sometimes accounting sort of not necessarily an afterthought, but not something that they sort of plan for or spend a lot of time on. So I guess I mean, I'm not the accountant, Wayne, so definitely jump in if I've got this wrong, but we could possibly start by defining sort of the difference between cash. So as I understand that, cash accounting is recording the transactions when the cash changes hands, as opposed to when the transaction happens, which would instead be accrual accounting.
Yeah, even more so. I think what we see is, folks rely on their bank accounts to identify transactions, right? So in cash accounting, it's very typical that a brand sees a deposit that posts through any number of their payment gateways and says that's revenue. And even beyond that, where it's more particular to e-commerce, is what happened months before they had that deposit. They had to outlay cash for product. They had to outlay cash for spend on marketing efforts. They may have had to hire an agency. So it's all of those things that happened up front that typically puts them in a position where they have an inaccurate picture, right, of their current financial management. And it really does a disservice for them when trying to make key decisions within the business. So in our scenario under cash-based accounting, let's say as a primary example, you have a brand that has a 8-week lead time. So you're sitting now here in December, and you're looking to source product to be sold on Amazon or on Shopify. So you make arrangements with your supplier, you come to terms, you issue a purchase order, and you're put in the position where you have to make, let's say you have advantageous terms, you got to put down 30% deposit. You send the wire. What typically happens under cash-based accounting is that wire is sent, funds are taken out of your bank account, it's recognized as a cost right then and there. 2 months from now, you have the product available for sale. You've done an amazing effort in targeting your core customer. You get that sale. Shopify processes payment through PayPal. PayPal posts the deposit, funds enter your account in February. Now you have sales. But what's missing? All of those costs that you incurred in December. So it's unclear. You then are sitting on what looks like 100% profit, right? Because you have no matching of cost. Where when we talk about a better approach, one that provides you a more accurate picture, one that helps prepare you to be growth ready in understanding the financial obligations and helping to track the progress against certain profit goals you have in your business, we suggest for all brands, if your intent is to scale, to move to an accrual basis of accounting. What that simply means is we're not going to ignore the money spent in December, but we're simply going to use the balance sheet as a place to hold that money. The profit and loss statement will then incur that cost once that sales generated. So then you'll have alignment of sales, cost, and that cost, sales less cost becomes your profit numbers. So now you have a clear picture of how much fuel is available to make those investments in future supplier POs, in future spend on your marketing efforts. So for us, really, that key action, or first, let's say, how do we identify if we're on cash basis? You have a very uncertain picture of what your profit margin looks like, right? How can you address that? You can consider switching, right? And this is not something you just say, well, I'm just going to make the switch. You really got to, you want to consult a professional. You want to talk to a tax accountant, see if there's a particular advantage if you remain under the cash basis. And one thing to understand too is you can have a different method of financial reporting than is done for tax reporting. So one thing to understand is like, who's your audience? Like, what are these numbers being pulled together for? How are they to be used? If it's for where Bean Ninja's best supports under what we call operational finance, so you as a brand operator are using these reports to help make key decisions on how to better run your business, accrual basis, slam dunk. For tax purposes, that's where we're not as clear that it's a slam dunk for every brand.
100%. I think you made a really good point there. A way to potentially identify this is if month to month you're seeing the real ups and downs, which is something we see all the time. Essentially, it looks like they're having a bad month, but they just laid out some money for some inventory. And I think probably another point to keep in mind, especially for e-commerce sellers, is that they're not paid like a traditional retail store might receive the money on the day of the sale, but Amazon sellers, for example, are probably, well, they're going to be paid 2 weeks after they actually, made the sale. So Amazon sellers get paid every 2 weeks. So if you're recording that only when it happens, then you might have 1 month where you have 3 payments come in. So it's looking like you're having an awesome month. And then the next month, it might be down because you only get, say, 2 payments. So it's really important to make sure that you're actually accounting for those sales when they happen, as opposed to just
particularly in those months where it may be that their fortnightly payment makes it where there might be 3 deposits that post in a particular month. So you're celebrating thinking, I had a record-breaking month, when in reality, you did it. The timing just happened to be right, that those deposits. So I think I shared one solution and action that folks can take, and that's consulting with a professional and discussing the impact of switching. But how can A2X help brands better move toward an accrual basis accounting?
Yeah, sure. So if you use A2X, then A2X will record the transactions when they happen. So if it happens over like a 2-month period, so say you got paid in the first week of December, it's likely that some of those sales were actually for November. So what A2X will do is we'll break down the transactions so that they're recorded in the month that they occurred. There is one other point that I would like to touch on there, Wayne, is working with you mentioned working with different experts. We would definitely recommend, and a lot of our customers use A2X through an expert e-commerce accountant, because they understand these transactions. They understand that Amazon actually only pays the seller every 2 weeks, and they know all the different intricacies that go with all the fees and things that Amazon charge. So yeah, A2X can really help you, but I think the benefit you get for talking to someone that actually is familiar with Amazon and Shopify and all the different tools will, I would definitely recommend that as well.
Yeah, I think it's key to remember the accrual basis of accounting is going to be more complex, right? But the benefits really outweigh that challenge for most brands. And it's almost like you need to consider the resources available to you to take on that challenge. And it's going to be using the right software tools. We rely upon not just A2X, but also QBO or Xero as a tool within our tech stack to help us address this challenge and key mistake. But also it's the team. So the team is specialized in their education and their unique experience across hundreds of brands each and every month, where there's these issues that may be new to you and your brand, but certainly aren't new to an e-commerce specialist firm.
Totally. It's funny, we were talking about it yesterday. Hey, like, people will often find an accountant through a recommendation, and a lot of people aren't actually aware that there are expert e-commerce accountants. So yeah, definitely reach out.
And I love how you just had the perfect segue into our next key mistake, right? I think particularly with Amazon is we see brands recognizing net sales instead of gross sales. And I'll provide a little background to this. So what this means is we discussed cash basis, and there's a deposit that posts into your account. And for Amazon, this is quite a large deposit that's only done 2, maybe 3 times in a given month. But what that deposit represents is the net sales. And what that means, net are the funds that remain available after you've recognized your gross sales against all of the Amazon FBA charges and fees that came about by selling on the Amazon platform. It's a mistake we see with many newer brands that had quite a fast-paced success, but also for established brands that just didn't know any differently. And I think some of the risk that comes about in this key mistake is you're entirely relying on Amazon to be 100% accurate. And their calculation of all your fees and just accepting that as like that as the word. And what we found through the rise, certainly throughout COVID, and also in this being a key mistake made across many brands, is we've seen solutions that have come to the table that have allowed for folks to go back to Amazon, have supported brands in identifying some mistakes that have been made. We had a particular scenario with a customer that had become aware that Amazon had wrongfully measured the dimensions of their product and was using packaging that was more expensive than one that could otherwise be used and that should rightly have been used. So they were being overcharged for fulfillment. And they were able to work with a third-party app that identified what their appropriate dimensions are, submit the ticket, and receive refunds for these inaccurate charges. But I think even at a minimum, to have the ability to look across your profit and loss statement and identify the trends so you can see very clearly if there's a spike in Amazon fees, start digging in a little bit, peel back that onion, right? Like, what are the drivers that are being reflective in this increase of cost? And do they make sense? If they don't make sense, ask the questions. And perhaps you can identify or uncover some savings or inaccurate billings that have occurred. Any insights, Amy?
Yeah, I think it's a really good point. And the other one I would add is that new fees get added all the time. And so we see this because obviously working with such a volume of Amazon data, all of a sudden, I mean, sometimes Amazon doesn't even give a warning that it's coming. There might just be a new fee, or they might change their fee structure slightly. So, I mean, it's really hard for the seller to identify those. So, I guess, like I was saying, working with the volume of data that A2X does, because we see so many Amazon transactions come through, that is something that we will obviously help to identify. But yeah, I don't know how a seller would try and figure that out on their own, especially if they were just recording that deposit. It might be that their sales are actually increasing, but they're getting charged more fees, and there's no way that they're going to figure that out if they're putting the whole deposit to the bank account. And I think like accounting softwares actually kind of make it easy for sellers to do this, because they see the deposit coming into the bank account, and we see it all the time, especially when we're doing demos, and you kind of just want to go, no, don't do that, because you see the deposit hit the bank account. And I think like Xero or QuickBooks will actually suggest just putting it to a sales account, and it's super easy. Just click and it just sends it
Right.
there, without kind of the realization that that is you know, that's had fees taken out of it. That might include some tax as well, which is another whole conversation. We had an example recently where a seller was working with, they weren't working with an expert e-commerce accountant, and they just started to get a bit of a funny feeling about their tax. And maybe they came across a webinar or something, and so they reached out to someone that actually knew e-commerce, and then yeah, they realized that they'd massively been understating their income. So with Amazon, it's really common for marketplace facilitated tax. So Amazon might be collecting tax on your behalf, but you need to ensure that that's actually correct, and you're splitting out the right local taxes or VAT, or yeah, however it works with wherever you're selling. So definitely don't just put that whole deposit to sales. Make sure that you're splitting that out and understanding, yeah, what those transactions are.
Absolutely. And these are no small fees. I couldn't imagine any other line item in your profit and loss where you would ignore recording what at sometimes is 40% of your gross sales number. Could you imagine looking across and say, oh, wages and team
Yeah.
costs, we're just simply not going to identify that individually on our profit and loss. So one of the things that we've seen in our experience in serving brands is also that this clear reporting where you're itemizing your gross sales and your Amazon expenses also provides a significant degree of investor confidence. So where e-commerce brands are particularly dependent on many occasions for outside investment, being working capital loans, being outside partnerships or investment, these itemized financials help really add that confidence that you're on top of the numbers and that you're also looking into all of your expenses in a manner that you can take action when things fall out of trend.
100%.
So what do you think, Amy? Ready to move on to the next one?
Yeah, there is one other point. Sorry, I feel like I could talk about this forever. The other thing I was
Yeah.
going to say is often we find that when you're going for, or if you decide that you get to the point that you do want investors or loan, I think that sometimes when accounting comes to the forefront, and if you haven't been doing it correctly, that's often when you kind of reach out to an accountant. And I do just want to stress, like, don't leave it to that point, because often you will identify things that haven't been categorized correctly or accounted for correctly. And I can't imagine getting to that point and having a really successful business and then going to get investment and then realizing that perhaps your income wasn't what you thought it was, or you weren't splitting out fees or things like that. So the confidence that you will get for having your accounts in a really good place earlier on before you need them to be, I think is something that is well worth it.
And we talked a little bit in mistake number one about profitability, but one of the things that a specialist ecom accounting firm will help support you in is that understanding of which channels are most profitable. That we see now, it's not uncommon that, and it's probably more common than not, that brands are selling across multiple sales channels, where you may have a presence on Amazon, but you're looking to make that shift into your own online store, into Shopify, or you may have had a head start in eBay or Etsy. So you're able to then parlay that into an introduction of your product into Amazon. So I think that opportunity to have that clarity across those profit margins within each of your sales channels is one that really, as a business owner, helps direct your decision making around which sales channel am I going to really look to push. Of course, Amazon has the largest reach, but also it may not be your most profitable channel depending on how competitive you need to be on price. And I guess one last thing is also consider your pricing across each channel. It's not necessary or that you have to or are forced to have the exact same price across every channel. Once you understand the cost structure that it takes to sell on each of these channels, price appropriately to where you want your traffic to spend, but also where you can make the highest margin.
Love that. It's such a good point because it's almost like the wholesale argument, right? Like you give wholesale at a cheaper price because it's cheaper for you to sell. So think about that. Amazon, Shopify. Yeah,
Yeah,
I
there's a
like it.
lot of convenience. I even know, like myself as a consumer, like I certainly go to Amazon first to see if products are available, but I also look on the individual website to see if like a coupon will pop up,
Yeah.
or if it's a health product or something that lends itself better. I just purchased some new toothpaste, and hey, it makes sense for me to have that on subscription because I need toothpaste every month. So if I can save on a subscription buying it directly from a Shopify store, you have opportunities where for a consumer, different platforms might make better sense for them. And it's not a product I need within 2 days. I just need it to show up every month.
100%. Yeah,
Awesome.
great advice. I like it.
Perfect. So we'll jump into mistake number three, Amy, and that's no inventory accounting process. Now, let me touch upon this common blind spot. More often than not, we see, and it kind of speaks to mistake number one we saw, because in particular, the most impact that you see in moving to an accrual basis of accounting for your e-commerce businesses is in how you account for one, as Amy shared earlier, the timing of sales across a given month to another. But most notably, it's the timing of when inventory, or particularly on your profit and loss, your cost of goods sold, is listed in your P&L. We touched upon some of the key mistakes in terms of how to spot that. And that's simply that if you look at your profit and loss statement, if you're recognizing your inventory as a cost in the time in which money is leaving your account, then you are running an inaccurate inventory accounting process that doesn't provide you the most clarity into your financials. So really understanding, I think first, the journey, like just follow the process, the operations process that you're using to procure inventory. right? If we step through it, you're making decisions and working with a supplier, executing a PO, and coming to terms on some cash outlay that's being put forth in either a deposit, which is typically the first time money's exchanged. So an appropriate inventory accounting process, in our opinion, looks like this. You have both your balance sheet, which is the representation of your business's assets, liabilities, and equity, and you have your profit and loss statement. I guess one key mistake that probably overruns all this is lack of understanding of when to use your balance sheet. So this probably most articulates this mistake as it pertains to e-commerce brands. So in my example, talking high level, right? We would post those deposits on our balance sheet. We would then have some notification that our products have shipped. So at B Ninjas, we use a balance sheet classification under inventory that's called goods ordered, not received. So it may be on a boat, on a plane. It's simply not sitting at your warehouse available for sale. And then that product gets received. It's identified either by your 3PL or identified at Amazon as being in their warehouse. Then we move that product, but it's still sitting on your balance sheet, and it may sit in a classification that provides you that visibility that that inventory is available for sale at warehouse. Now is when the fun part starts. You have the opportunity, you've generated the sale, you're working under an accrual basis of accounting, you want to match that cost and recognize it to your profit and loss statement as cost of goods sold. One thing we'll get into, and I'll kind of preview, is then you need a method to recognize, well, how much cost am I pulling across now? And without getting too deep into and ruining our future mistake, is at that time where you make that alignment, that's when you're recognizing those cost of goods sold on your profit and loss and moving into that true inventory accounting. Beyond that, the only thing I'll share before I turn it over to you, Amy, is that there's also a need to have a process for when and how often you're going to be reconciling. So it's important that you have visibility into the quantity and the valuation of inventory that's sitting in your warehouse or in transit, and a way to true up so that you represent first against your system of record, source of truth for what that inventory number is to your balance sheet, and then also offset those adjustments with what's been recognized as your cost of goods sold on your balance sheet. So Amy, any insights on how one might better address this and help solve this key mistake within their accounting processes?
Yeah, definitely. I think I'll first just start by saying it's, I guess, as not being an accountant, when I first came across this mistake or this process, I guess it's just a different way of thinking about it, because often when you're purchasing goods or stock, it does feel like a cost because you're paying money and you haven't received it yet, but it is an investment. You are going to receive that stock and you are going to be able to sell it. So to be able to have that on your balance sheet is really valuable, because then if you were looking for investment, it's there, it's an asset. It's not just an expense that you've outlaid to get some stock, it's an investment for future stock. So I think, yeah, it's a great way to be looking at it. The other thing I would say, and it does kind of lead into the next point as well, is there's a lot of different systems that you can use to account or have a process for your COGS. Both, I guess, systems that you implement within your own business, whether that's within the warehouse in terms of stock takes and things like that, but also like software systems. A2X does have a COGS tool, and I can talk about that on the next point, but this is where I would definitely suggest talking to someone like an accountant. Like, talk to Wayne is what I'm saying. Talk to B Ninjas, because I used to get asked all the time when we were when I was doing, talking to people that were coming on to A2X, and they'd be like, yeah, I understand that, I understand the accounting, I understand A2X is going to do that, but what should I do for my inventory? And honestly, the first thing I'd say would be like, talk to an e-commerce accountant, because there are so many different systems, and I feel like the good thing with accounting is there's a right way to do it and there's a wrong way to do it. But with inventory, every business is different, and it depends where your warehouses are and what systems you use and where you're shipping to and where your stock's coming from. And there's a whole lot of different methodologies that come with this. So I would definitely recommend talking to someone that actually knows all the systems. And often too, I think it's easy to jump in and think that you need a bunch of fancy systems, but a lot of sellers that even at a really high level will still use a spreadsheet and have really good systems implemented within their business.
Absolutely. And I think too, the reason we know that this mistake is important is we're seeing a considerable investment in news coming out of both QBO and Zero about solutions that are being built specifically to assist and address this mistake. While the solutions at this time are quite limited to smaller brands, what they do allow for is that education and that understanding that this is critical to get right in the early stages of your business and provide that use case that software can be an amazing tool to help you identify a more appropriate method to account. And then I think as a brand operator, it's important to consider that your needs are unique to your business. While we're talking very general about inventory accounting, I think what's important to understand is like your business has unique needs. There's not one business that's exactly the same as another. You know, as you mentioned, you may hold inventory in your spare bedroom, in your garage, your mom's basement, and at Amazon, and at a 3PL that's helping fulfill for you across some of the other platforms. So to have an opportunity where all of that data is collected, it may be that the best approach in the early stages, one that you have control over, one that you feel very confident about being a single source of record, a system of truth, may be a Google spreadsheet, right? But at scale, that just doesn't provide you enough assurance, but also opens the door for a lot of issues and errors that then you really need to look into solutions that really are built to address this. And I think the first place to look when moving off of the spreadsheets, if you're a single channel seller or someone that's really has a low SKU count, you have little inventory complexities, look to the new solutions being provided by both QBO and Zero. But also, as you're looking to address this particular mistake alongside many of the others, look at the capabilities of A2X. I think here they provided an amazing solution in helping move toward one, that accrual basis of accounting that does help us here in that alignment of cost of goods sold and inventory. And I think, Amy, that might provide a good intro into our next mistake. Should we move forward?
Yeah, let's do it.
All right. So we're going to get into now not clear on landed cost. And I think this is another common blind spot because there's not a tried and true standard definition of what landed cost really is. Because as each brand is different, they're procuring from different suppliers. You may enlist the support of quality assurance experts at the port where products being shipped from. You may have consultants that are working with suppliers on product development and different things across packaging and maybe your fulfillment charges. But our definition is simply those costs that are required to manufacture and have product delivered to your customer's doorstep should be considered as landed cost. And I think where this is important is within our process of moving toward a more accurate inventory accounting methodology is to have for each SKU that you're selling a landed cost figure. And why that's important is in our use of A2X as that bridge between sales channel and accounting platform is we have the opportunity to upload our landed cost list. So just as A2X is aware of all the SKUs that are being sold within any given settlement, so that deposit that posts to your account, it also understands the volume of SKUs across the different range of products and can match that landed cost to that volume to identify for you a landed cost figure to be matched with those sales amounts as your cost of goods sold. Amy, if you could share a little bit more about kind of how we can identify these mistakes and provide a bit of a solution, and how A2X thinks about and helps address this for customers.
Yeah, definitely. So that was a really nice overview of the COGS part of A2X. So the main part of what A2X does is the reconciliation. So kind of what we talked about before, when the deposit hits your bank account, A2X will create an entry that will categorize that all out for you. That's kind of the core part of what A2X does. But we do also have a COGS functionality. So we'll identify the SKUs that were sold, and then you'll work with probably your accountant, I'd say, to come up with the cost of what those SKUs cost, the landed cost of what they are. And then so you can input those, or you most likely be tracking them in a spreadsheet somewhere. And so A2X can then pull those numbers in, and it will work out the number or the value of the stock that you've sold for that time. So it all kind of ties together really nicely in what Wayne was saying before. So you purchase your stock, you have it in your inventory asset account, and then you're selling your COGS, or you're selling your goods, and then A2X will reduce that inventory asset account. So it will put across a entry, and so it will say, okay, this is say $500 worth of stock was sold at this time. So it reduce your inventory asset account by $500 and apply that to a cost of goods sold expense account. So it just creates a really nice way to keep track of your COGS as they're being sold.
And I think this is a task that sellers probably do already when they're first dreaming about selling product online, right? I think, or it may just be me as an accountant brain, right? Like if I were to go to market with a product, I'd want to understand in developing my pricing, how much does this product actually cost me to make, to package, to have a warehouse fulfill, to ship to my customer, to, receive at my warehouse. So in understanding all those costs, what we're simply saying is the landed cost is a per unit cost for that individual product. So what also that information helps you understand is, before I've had the opportunity to move that cost from my inventory asset account on my balance sheet to my expense account on my profit and loss statement, is I had to spend something to market that product. Well, how do I understand a budget available that allows for me to market that product profitably at the price I intend to sell it at if I never did a landed cost analysis? So we call this a unit contribution calculation, and we have a template available on our website, or if you have interest in having me send to you this free template, certainly just reach out at hello@bninjas.com, and I'd be happy to email it with a bit of instruction how to use it. But I think having that analysis done up front, every time you're looking to establish the price of a product, but also establish that marketing budget that's going to be attached to that product, you then can just save that information so that when you're at a point to where you're looking to enlist software or looking to move and recognize that cost at sale, is you have those numbers readily available.
I think it also ties in really nicely to the point you were making earlier about different sales channels, because it's highly likely that different sales channels will have different costs to sell on. And I think it's also really important when you're considering selling to different markets. So if you're thinking about selling, overseas or in different states, for example, making sure you're understanding the specific costs of getting those products out to those customers, because it can be really easy to grow and think that it's best just to sell everywhere. And then you might apply, say, the same discounts to all customers without really kind of understanding the implication that that's having, on your margins.
That's a great point. Awesome. I think we've covered most of what we wanted to share on landed costs. Shall we move to our final mistake?
Let's do it. Yeah.
Awesome.
I think you've got a little question there as well.
Awesome. So we've got a bit of time also for questions at the end, but let's cover this final mistake, and then we'll cover in the remaining time we have any questions we've got in the chat. So I want to preview this last point. So it's relying on the default chart of accounts. I think one thing that we often see is that brands begin to grow and they begin to scale and they develop that clear understanding that running their financials on the back of a napkin or in just peeking into their bank account is no longer viable for them to have the key insights that they need to make those most informed, difficult decisions and key analysis into their numbers. So they move into either QuickBooks Online or Xero as their first option. And in doing so, there's a setup wizard and they work through that setup wizard and they get to a place where they're asked to upload a chart of accounts. And more often than not, brands simply select the default chart of accounts. Now, why is this a key mistake? Your standard chart of accounts is generally very generic. It's designed for broad use cases and applicable to any industry and in any business. And it doesn't accurately capture the specific needs that you as an e-commerce brand need to understand across the various sales channels, payment gateways, platform charges that you're seeing in your business. So what we recommend is identifying a e-commerce specific chart of accounts. And again, as a resource, we have toolkits available for free download on our website that provide you these chart of accounts. Or I hope, the message has been clear, is enlist the support of a professional specialist e-com service provider to deliver those insights and help you set up those tools so that you really, what that does is allows for your reporting to then represent what's been identified in that customized chart of accounts. So if you want clarity into the total ad cost that you're spending across Google and Facebook, rather than having it buried into your marketing expense line item, you can have a section in your customer acquisition cost expense that covers just the paid media cost, separate from your agency fees, and begin to then use that information to develop those key performance indicators that are most relevant to you as an e-commerce operator. Amy, insights on this last mistake?
100%. I think, it's really easy to get set up in these systems, but what does often happen is that, like you say, a lot of transactions will just be posted to the one account. So sales, for example, I'm sure that's an account that everyone's wanting to keep an eye on, but it's likely that if you've only got a very few chart accounts, kind of the general ones, it's likely that things might be posted there that aren't specifically sales, or it might not give you a really good idea of how the different platforms are going. So you could look at having a different sales account for each of your different platforms. You could also look at making sure that shipping income is split out, advertising, discounts, things like that, because otherwise you really are quite blind. You might be seeing sales go up one month and down the next, and then not be really that aware if that's actually just because you're doing more sales, or maybe you're providing more discounts, or getting charged more, or things like that. So I definitely think the visibility you get from splitting things out and having more detailed, and I would definitely say talk to an e-commerce expert about this, because one thing we've also seen on the other end is people wanting to almost use their accounting system as like an analytics tool. So they then end up with lots of chart of accounts, which is like, for example, trying to post an individual like SKU or product to its own sales account. That is definitely doable if you want to have different lines, and A2X would actually allow you to do that if you wanted to have your different products go into different sales accounts. The problem is it just gets really difficult to maintain, and it gets really large, and it could actually swamp your accounting system. So I think there's a really nice happy medium in terms of not having the basics and not having too many, and also making sure you can get out of your financial statements exactly what you want, and also understanding what's going into each different account as well. So yeah, that's something an e-commerce accountant would definitely be able to help you with. And I think that's also worth considering, because perhaps a general accountant would maybe consider would maybe suggest that you use kind of the default chart of accounts, because they likely would have the same accounts across every different client that they have, without specifically having those like Amazon sales accounts or Shopify sales accounts. So yeah, I would definitely suggest talking to someone that understands the type of business that you are.
Absolutely. I think at a minimum, one thing that's important to share is that, we believe it's critical to recognize cost across a few major areas that are relevant to all e-com brands. We talked about, particularly for sales, I love the idea of having chart of accounts that represents your revenue, discounts, refunds, and platform charges across each sales channel, so that you have clarity into the gross margins that are being generated across every one of those sales channels. But underneath, where we start getting into costs that are more relevant to any e-com business, regardless of channel, is to have an opportunity to group and understand how much is being spent in customer acquisition cost, how much is being spent on wages and team cost, and how much is being spent on OpEx, so operating expenses. This, of course, is after you've already understood the cost of sales that are being expensed across each sales channel when getting to that gross margin number. So some of the format would look and provide you, as Daniel asked in the chat, what were some of the favorite KPIs on the P&L that help advise clients on increasing profitability? I would say the first is your gross profit margin across each sales channel. Your second is your contribution margin, which is your margin, so the dollars remaining after spending on customer acquisition. And then lastly, using the ability of those major groupings of functional cost, from cost of sales to customer acquisition to wages and team cost to OpEx, to understand your baseline spend as a percentage of total sales, so that you can understand the baseline and then trends that impact that in your decision making going forward. So if I understand, as an example, we're often asked this extremely pointed and difficult question to answer, right? What's the best margin? And really, it's like saying, like, what's your most optimal weight? Well, your optimal weight is one that you feel good about, right? Like, I might feel good at 205 pounds, but someone that's 5'4" certainly will not. So I think once you understand, like, what's your baseline, and then ask yourself and be truthful, like, do I like this baseline? And if not, then better than the baseline is a better number and shows growth over where you're at today. So to say that, you typically hear, oh, it needs to be, your margin needs to be X percent. Well, what if you can run a profitable lifestyle business on a smaller margin? So that number might be able to be a bit smaller. You can make more aggressive pricing strategies, offer more aggressive discounts, if your goal is not to scale to exit for, a life-changing sum of money. So I think everything's dependent on what your situation is. But at the end of the day, if you can truthfully answer, like, hey, I understand what the baseline is, and then I'm happy with the baseline, or I'm not. So directionally, I'll begin to make those changes. And as long as I see positive results in those changes over time, I know I'm moving in the right direction.
Totally. I really like that and I think often when we look at increasing the margin, you think of doing more sales, but when you're splitting your transactions out, you actually understand what's creating that bottom line. So we say all the time, is discounts can be killing a business. Like, I think it's so easy to set up a discount on Shopify, right? So just being aware of the impact that those are having on your bottom line, or I guess also keeping in mind advertising costs on Amazon and things like that. Just making sure that you're aware of the impacts those are having, and maybe it's addressing those rather than looking to increase your prices or selling more.
Awesome. So we have a bit of time now for questions. So if you do have a question, please post it in the meeting chat. I'm going to also pull up questions that were previously submitted. So bear with me. I'm going to stop the slide sharing, and then I have questions here. The first question that I see before I get into the chat that was provided was, what are the best practices for tracking and managing inventory? I think we did a good job covering that. So if there's additional questions or more specific insights that are needed for this, I think the best practice is really implement a tracking and inventory management solution that you will stick to and use each and every month. I love to use the analogy that the best workout program is the one you actually do. So if it's getting out of your bed and taking a walk and getting your 10,000 steps in, and you're going to commit and actually deliver on doing that, then that's the best workout strategy. In the same way that if you're going to ensure that you have 100% compliance in updating your Google Sheet and moving funds or inventory counts from one area to the next, start there, use that. If you're looking for the best in class, it's implementing an inventory management solution like Finale Inventory. What used to be Deer is now Sin7 Core is also one that we see many customers use. And then Unleashed, we're seeing a lot of brands use, more particular in the UK, but we're seeing some traction in the US. But also look at the new offerings that are being presented by both Xero and QBO. If your inventory tracking and management needs are limited to a few or a limited number of SKUs, and not that complex. Amy, any insights to share to close this one out?
No, I think it's a really good analogy, right? It's like when you go to the physio and they give you all these exercises and you go the next week and they're like, have you been doing these? And you sort of say, yeah. And they know full well that you haven't been. So your inventory system probably doesn't have to be super complicated, but making sure that you're sticking to it and tracking them and yeah, following all the suggestions that we've provided earlier in the presentation.
Yeah, we have another question here in the chat. So Jeff has asked, could you share a link mentioned for BNinja's template for e-commerce chart of accounts? I think if you go to bninjas.com, you'll see a pop-up. It'll ask if you're interested in either a Xero toolkit. We also have a QBO toolkit, also found under resources on our website. But also a follow-up email if you're having trouble identifying those free resources from the toolkit downloads on the website. Shoot an email to hello@bninjas.com and I'd happy to be a reply with just the Excel download for those chart of accounts. Another question, I'll go to the chat, is from Daniel. And Daniel asks, what's your thoughts on TikTok Shop as a sales channel? And I think my initial thought is, man, like how exciting, like of a space we're in, right? That there's an opportunity to leverage your current sales channels, but also add new opportunities to get in front of like millions of people that you wouldn't have thought you had exposure to. I also want to share like a kudos to our delivery team. I think when we first identified like the need to recognize deposits against a sales channel and discovered that people were making sales from TikTok shops, we were like, whoa, like there's a bit of homework we need to do to identify what's the most appropriate process to go about recognizing these sales and how do I identify a match to ensure that all the sales that are being generated are actually represented as payments into their bank account. So the team spent a lot of hours and in a large effort in identifying the workflow to how to recognize and then manage that order to cash process so that we were clearly getting behind in supporting our customers in sharing that visibility. But I'm very excited about TikTok Shop as a platform. I think that the creativity that comes about is unmatched in terms of any other kind of social ad channel. It often, I think those that are most effective on the channel come to it with a very creative angle that wouldn't be available to them with like static images or ads that are typically seen on Facebook or Instagram. So I'm excited about it. And I think what we've seen is brands seeing tremendous success being first to market there. And it does particularly well, we've seen with beauty brands, where we've seen people have record breaking, of course, we're coming out of like the e-commerce Super Bowl, Black Friday. I guess now it's called Cyber Week. Um, so we've seen, a lot of traction with brands being first to market on the platform. And I've also heard from folks, it's like Amazon was like 10 years ago. It's like not a lot of people have cracked the code. If you're selling a product that particularly aligns with an audience that would be on TikTok, explore it. Get products up, get them listed, and it certainly is a viable channel. Amy, any thoughts on TikTok? Are you a TikTok shopper? Oh, Amy, we've got you on mute for some reason.
Oh, sorry. I was just saying I've like dipped my toes into TikTok. I haven't I know that A2X is actually doing quite a bit on TikTok. So we yeah, it's one we get asked about a little bit, and it's awesome that it's had so much growth. Like you say about the Amazon back in the day. At the moment it's supported. I think a lot of sellers use TikTok with their Shopify store. So yeah, we're seeing a little bit of growth there. But it'll be interesting to see if it's yeah, and a channel that really takes off and stands on its own, or it continues to be supported through Shopify. But yeah, awesome opportunity. I think it also drives home the point of understanding the costs of selling on individual channels, like you said before, Wayne. If it's an economical one to sell on, then definitely dive in. So yeah, it's a exciting space. We'll see what happens.
Yeah, we have just a few minutes left. So before we wrap up, I'll take one last question here. We also have a last question we'll take in the chat. It's particular to Bean Ninjas. Shares Bean Ninjas has local offices and supports customers in Australia, the UK, and the US. Any plans for Canada? At the moment, we don't have a growth strategy that looks at supporting customers, particularly delivering only in the Canada market. But I'll leave it to Amy to close us out with an amazing resource that they have available on the A2X website that might connect you with a firm that can provide support.
Definitely, yeah. So we've got a directory on the A2X website. So we get a lot of inquiries that come through our support team, and they say, this looks great, but I need some help with this. So obviously there's the support team on hand, but we always recommend that they reach out to an e-commerce accountant expert. So I can send through, maybe I'll give you the link, Wayne, I'm sure you have it, maybe we can send it out afterwards. But even if you just Google e-commerce accountant directory, the A2X directory will pop up, and there's a list of expert e-commerce accountants that specialize, just like Bean Ninjas and Shopify, Amazon, all the main e-commerce platforms. And so it's great because you can filter out by channel or by location or by your specific needs. Maybe you just need a basic setup, maybe you need bookkeeping, maybe you need accounting. The directory is great. You can go through it and find yourself an accountant or bookkeeper, or you can actually do that. There's this Find Me tool as well. So you can also go through that, and A2X will match you with an appropriate accountant or bookkeeper based on what you're looking for. So yeah, check it out.
Awesome. And I want to thank Amy for joining us today, and A2X once again for being an amazing partner in sharing in our vision of making e-commerce accounting easy for brands to scale their business and also have the unique clarity and insights into their financials. If you're watching this on YouTube replay and you have questions, please feel comfortable asking those questions to us directly at Bean Ninjas. Share an email to hello@beanninjas.com. Amy, any final words?
No, I was just going to say thank you for having me. The time's gone so quickly. I've loved it. We love working with Bean Ninjas. So yeah, thanks for having me.
Absolutely. And everyone in attendance today, thank you so much for attending. If there's any questions that we didn't have an opportunity to get to, feel free to reach out to us directly at hello@beanninjas.com or check out our website for available services. Take care, everyone. Have a great holiday season, and we'll see you on our next webinar.
See you later.